Hello, and today I'm going to present a company called Xeros Technology Group PLC, based in the UK in Rotherham. I'm going to talk through a little bit about what they do, what their current financial position is, where they're going next, and what I've done with them. Before we begin, obviously this is in no way financial advice. I'm not an analyst. If you want to invest in any stocks, please do your own research before investing capital. Xeros develops filtration technology, what we're calling washing efficiency technology, and clothing care technology for domestic and commercial machines. So this is, in the filtration sense, we're looking at microplastic removal. Efficiency, we're talking about things that help reduce water usage, and clothing care, things like technologies to reduce the amount of sludge emitted when you make things like denim. It's a licensing driven business. So they develop patents, they license their technology to large manufacturers. This allows them to be really inventory light, not take on massive capital loans or debt. There is a risk of patent circumvention. Could be a major risk for a company this size, but they look pretty solid at the moment, being in place with several really important companies. What drew me to them was their kind of cash to current liabilities. I mean, cash do actually make up a massive amount of their current assets, which is really interesting to see. Other things that have recently come out from their annual report is the fact that revenue grew 81% last year. This was due to an increase in the price of their licensing fees. They also managed to reduce their losses from previous financial year. It's still, a fairly significant 4.3 million. But the reduction and what I'll come on to next looks pretty interesting. They're currently either in development or have deals in place with Hanning, IFB, and Yalmak. So these are a range of international washing machine manufacturers, either domestic or commercial. So different deals are at different stages, but some are at the kind of end of R&D, moving into production in the end of the year, and the one with, I believe it's Yalmak, is actually launched a few days ago. They took the measure to reduce around 30% of their headcount, really moving into the kind of cost reduction, which will put them in a better financial position next year, as well as these obviously deals going through. And they're currently in discussion with various groups across the globe, including things like fashion-based sustainability charities. Speaking of which, that's something that seems to be one of their catalysts, really. Is fashion is moving towards a kind of environmentally friendly, sustainable future. So this is kind of perfect time for that technology to exist. The Yalmak machines are being launched or have been launched very recently, and the IFB machines, they'll be kind of coming into production towards the end of the year. So this is a significant market that they're already kind of into and engaged with. Obviously, they're not the only ones. Current share price sits around 1.5 pence. In 2019, this peaked at a massive 11,587 pence. It actually seems unbelievable. It seems like this was mostly speculation, and the company was listed under a different name back then, so it wasn't called Xeros Technology. But based off this, I've moved into a 13,000 share position as of today. I'm seeing it as I can't lose. Share price is so low, and with the current set of clients and the deals that are moving forwards, I cannot see a way this drops below 1 pence. Obviously, there's potential risk there. We mentioned the patents being circumvented. That seems to be the major risk. But the engagement with the market, the timing of it, it just seems like it can't lose at this stage. But again, please don't take my advice. Please do your own research. And if you have any feedback on this thesis, please let me know.